Good morning, Stocktwits Nation. It is Thursday, March 27th. It is also opening day in America. Shay, are you a baseball fan or not so much?
I am, and I am a Dodger fan, so I am
Okay.
living peak life right now.
Amazing. Okay. I'm a Yankee fan, so I'm not, but historically I have been. So I'm okay with it. You know, sometimes you're up, sometimes you're down. Do you have any favorite stadium foods?
Oh, Dodger dogs
Uh,
easily. I love, and now I'm a little bouged up a bit for my taste. So I like the all you can eat buffets behind home plates, like those kind of
what's in
like
there?
oh my god, the salad bars, like ribeye meat,
Wait, you have
sushi. Like
salad at a baseball game?
I love salad. I'm
You're a
obsessed with salad.
maniac. It's
No,
like
but I also
90 degrees and you're taking down a salad. Oh yeah, this is that's disgusting. I can't even look at this thing.
no, but like I just love like having a Dodger dog every 3 innings, like nachos. Like I still go hard, but like I love me a salad too.
Yeah, I like Yankee Stadium. They got the best economic deal of any like food combination, which is a $25 bucket of chicken tenders and fries, and it's just all dumped together. And you get
Jeez.
it and you share it, and it's just like freaking disgusting because all your friends are like reaching
Oh,
in and like someone spilled beer in it, and it's the
that's
best.
disgusting.
It's literally, but it's $25. Like like I get it. I'm like making money. I'm like this is like the best deal. But hopefully everyone's teams have fun today and do well. There we go. Oh, that's actually a different setup. That's the beer. That's the nugs on the beer. It's glorious. I love baseball. I, w-
America.
I wish it wasn't such a
America.
dying sport. You need Gen
I,
Z to step up. Start watching baseball, guys.
attention spans. The attention span's pretty brutal for the
Oh.
every generation, and baseball definitely tests your patience watching it.
Yeah, but maybe like we were saying yesterday, this like back to earth movement, touch grass, like maybe this will be like an
No,
analog. They can turn their phones off. They can have the chicken bucket thing. We'll see. We will see. But a lot happened since we spoke yesterday. A lot of news coming out of the market. I think we'll get into sort of where everything is at, but I did want to start with Robinhood because we've been talking about them a lot lately. And they had a big event last night. Shai, what did they share, and what does it mean for investors?
yeah. So I think we what we got yesterday was another glimpse into what Robinhood is trying to fully become, which is this full end financial ecosystem. There's the Robinhood's evolution is really simple, to be honest. Like there's trillions of dollars of wealth that's being transferred from millennials to Gen Z, and those younger generations, like you, myself, the Gen Zers, even the alphas, like they aren't looking for the brick and mortar banks. Like, oh, I'm gonna look for like the nicest Chase Bank. I'm gonna go to a Wells Fargo bank. Go in person to do something that's so analog. No, like they're also not looking for clunky legacy apps as well because they all have apps online that we can do virtually. It's not easy to the eyes. It's still very clunky. This new generation, they want a clean, integrated platform that does it all. Investing, banking, planning. Yesterday we got some news that there are going to be some like actual wealth management, payments, credits, and now taxes. Like you can do taxes now on Robinhood. And then you also can get cash delivered to your doorstep. So no more ATM. So that's, and also like there is Cortex, an AI assisted for financial research.
Yeah.
So they're just doing everything that you want for a financial ecosystem, and it's going to benefit a lot of the gold members, these new initiatives, and they're adopting. I don't know. You can say it's the Costco finance because of if you have a membership on Costco, you can get in and do all these great deals. You can call it the Amazon of finance because if you're a Prime member, you get a lot of free deliveries and it's a lot discounted. Whatever it might be, Robinhood is becoming that for the finance fintech space. And this is something that is resulting in like a ton of gold membership. Like I think the analyzed revenue rate for the gold membership alone now is 200 million a year. That it was
Yeah.
nothing 2 years ago. It's like zero.
That's $5 a month, right?
Yeah,
Give or
exactly.
take,
five
depending
dollars
on
a
the
month,
bundle.
and you more than make up for that
Yeah.
down the line with all these benefits. But I do want to say, like Robinhood is clearly not a place that you just buy stocks. Like it's becoming the financial home for entire generations. And I think there's also a clear signal that it's not just like being satisfied being a full stack financial ecosystem. It wants to challenge traditional banks and also disrupt digital first banks like SoFi. And I
Mm.
think I made a comment this morning on X that this has got to sting if you're a SoFi shareholder. Like you believed in SoFi's mission years ago. Like they're the first full service digital bank that's trying to capture the new younger generation. And you watch SoFi build very slowly into that vision. Like they're winning the bank charter, they're growing their deposits, they're acquiring the customers through their student loan refis, and they have a credit card and you can do mortgages. So like all the foundation is there, but the vision is trying to tackle this new movement we're seeing in wealth transfer. So you can say like SoFi's laying down the brakes, but like Robinhood is clearly sprinting ahead with product after product. It feels very similar to an Nvidia like versus AMD type of innovation window versus second competing lagger, where they're both like totally different industries, but AMD and Nvidia are both initially were going after the GPU craze, but Nvidia was creating this ecosystem that allowed them to create created an environment where you stayed into their ecosystem and they kept you in it with recurring with a membership, and that's a recurring revenue nature for Robinhood. And once you have in Robinhood with all these different features, you're not going to leave. That's kind of what Nvidia was doing with their pricing
Hmm.
ecosystem. AMD never got a chance to catch up. So like I think it's also me saying like this is not a teardown of SoFi. It's still one of the most credible digital banking platforms in the US. I think Anthony Noto's doing a great job. It's just SoFi's SoFi's operating like a modern bank, and Robinhood is operating like a software company, and you're seeing the distinction starting to show on
Hmm.
what the implications are, where they're just becoming a tech company and innovating so rapidly. SoFi has the infrastructure, but Robinhood has the momentum. And I'm trying to look at my comment I made this morning on like the TLDR of all this. Oh yeah, if you're a SoFi shareholder, you're right to feel frustrated today, but don't be despair. Let it be motivation because the market isn't zero sum, but attention is. And right now, Robinhood has all of that. So I
Hmm.
think that's like a great mentality of a SoFi shareholder. Like, yes, you guys are losing right now. Like you guys are because there's a zero sum game for attention, and Robin has all of it. But doesn't mean you should be priced out. Like, just
Yeah.
innovate.
I mean,
Mm,
Robinhood, the word I think of is just velocity. They're
yeah.
kind of in their bag right now, like product wise, design. Like, did you see the card itself
It's
physically?
it's it's so
It's
nice. Yeah.
gorgeous. And like when we were talking about the gold membership, and like you referenced yesterday, Robin kind of having a media angle, it's almost like they're like the Amazon of financial services, where you have a membership, but then you have it's the one-stop shop for any financial product you want to transact. Like they've indicated they want to get into real estate, private markets, they got crypto, they got, it's almost like they're building this hub that's the like akin to what Amazon has built with like a uniform shopping media hub. And if like they can, that's a huge business. And like to your point about like SoFi and others, it doesn't mean that other places won't exist, but like they just seem to be operating like I don't know like who's working there right now. Like they seem to be operating at a whole different level. And I have like a interesting perspective because I was working at a Robinhood competitor for 4 years, and I was there at the competitor during the GameStop stuff. And I remember when like everyone hated them. They had like a PR nightmare on their hands. People were a boycott. I mean, the company I was at really benefited from that. We got a lot of people coming over to us. They had this like evil sort of, oh, they're in cahoots, they're hypocrites. Um, so it's, yeah. And we've talked about this before with like even the CEO brand evolving of
Mm-hmm.
like Vlad then, Vlad now. I think we have a funny clip from Ben from our network of podcasters a few years ago when Vlad was first doing his like press tours. It is crazy how much more polished he is now. But this is a hilarious clip because Ben is essentially telling him he should resign because everyone hates him. And like watching this now is so funny. Let's play a little bit of it.
So I guess, I mean, we're running out of fucking time
we
here.
just got the.
I gotta ask you. Okay, so I have a few things to wrap up here. First of all, how fucking pissed are you at Beiju? Is that his name?
Yeah,
Beiju?
his hands have been clean in this whole
not only
fucking
does
thing.
he, according to the internet, have a little bit more money than you.
A lot of bit more money.
Yeah, but like he just, yeah, buddy, you, and to that effect, a lot of people hate you and are mad at you and whatnot. Why not just quit? Just say, okay, fuck it, I'm out of here, and let me pitch you on this. Because
he did.
If
I think that, like, I look at that, and I'm like, what is he wearing? Like, he just looks like he hopped off a skateboard at Venice Beach. Like, I don't know. Like, it's just like, that's 3 years ago. So something happened there. But I think, yeah, if you're like a SoFi or some of these, like, damn, what is in the water over there? I think, did they also announce like financial advisory layer as well?
They did, yeah. So that's some like the wealth management essentially. So like they're doing everything. Like that's the whole spiel of it. And I do think it's going to disrupt a lot of jobs on the legacy banks of like, I don't know, that they have to really work for the newer generation now to manage their wealth. But I mean, what Vlad, I don't know. I'm wondering if there's like the same PR who did Zuck did Vlad, because if so, they need to set their own shop up and have every C-suite just hire them, because you're right. Like Vlad had a pretty big issue. Like he did.
His glow up, I think, was better than Zuck's. He's like a cool guy now.
Well, yeah, Zuck had the luxury of just like being so freaking wealthy and having his product was in everyone's hands every single day. Where Vlad, like, there were a ton of competing brokerages out there. Like, it was a very easy. Like, there's another world where Robinhood didn't succeed because of GameStop. He worked its way out of it. So kudos for him. And I also think he's adopting the new media angle where you're seeing it right now in like CNBC, CNN. Like, do people really like go on those websites anymore to get the latest and greatest? Like, I think they go on Twitter a lot to get this information. They go on this. There's podcasts now. There's talk shows like this every single day. Like this, there is a new age of media that is evolving now, and Robinhood saw that and adopted that. And now there's, even yesterday at that gold event, like we had a handful of FinTwin influencers who went there to cover the events, and they covered it on their accounts. And guess what? That's probably significantly more visibility on actual investors who want to buy the stock than, I don't know, Wall Street Journal covering the stock. And people was like, oh, that's interesting, but are they really going to move the needle on people buying that stock? No, it's through FinTwit. So I think that's I think that's a beginning of something much bigger. You're seeing Palantir, you're seeing Robinhood, like these two great companies, significant outperformers past couple of years, adopting the retail route, and look what's happening. And I think that's why a lot of companies are now seeing that, oh, maybe this isn't just a COVID bump. Like maybe this is the new catalyst, that maybe that was a catalyst for something that's much bigger, that's going to be much more permanent, that we need to adopt or be left behind.
Yeah. I was trying to find, I had a post on X that went quasi-viral, but it was basically a shot of their last earnings call, and it looked like a sports press conference. Like Vlad was at it was like the black table, and then the step and repeat with the logo, and they had the mics, and like it just felt different. And I think Coinbase does that. It's a definitely an interesting moment to be like an investor relations lifer, because this is not the playbook you were trained on, and you can see the companies that get it. Like, to your point, like a last earnings call, they had Amit from Amit's Investing, that huge YouTube channel, asking a question. And like, if you went to a CNBC producer, they'd probably be like, who the hell is that? This guy's got millions of followers. And so it is interesting. It's just the dynamics are changing, and the media piece, and like to your point, the attention, it's not just a game in consumer press, but it's also a game in business press. But yeah, I think we can all, you just look at that company right now and you're like, they're executing very well. And I think if you're an investor, you probably feel pretty good about it.
Oh, also, like I mentioned earlier, attention is a zero-sum game. It absolutely is. In fintech space, it's highly competitive because there's so many products out there. So knowing that's a zero-sum game, like I don't understand why competing competitors aren't just fleshing out tons of dollars for sales and marketing to capitalize on the retail traders, like going on these kind of shows to get the attention from a lot of the retail investors' eyeballs. Like, why aren't they just doubling, tripling down on this when they're being left behind because Robinhood's a first mover in this? SoFi, you can make the argument that there's a SoFi retail crowd, absolutely, but I think it's more one way than two way on that relationship. Where Robinhood, Vlad goes, like you just saw Ben from 3 years ago. He went on there and talked to people who aren't the traditional finance coverage. Like
They
he
were
does it
dogging
right
him,
now.
and you just sat there and took it.
Exactly. But like you respect that. I had
Yeah.
never seen that video before, and I'm like, damn, good for
Yeah.
him. Thick skin, respect it. I don't think Anthony Noto would sit down and do that. It's like,
Yeah.
it's just you respect those kind of, you want to believe in a mission oriented CEO. You want to believe in them if they prove it that wow, like he took it, and now you're like whatever message he's communicating, you believe it even more.
Yeah, I agree with that. It is a whole new era. I think the other thing I want to get off Robinhood for a bit, but the other thing that was kind of silly about the announcement was this home cash delivery thing. Like you can order cash to get, like you could basically Uber Eats cash.
Yeah.
Which, well, I don't get that, but like, you seem to think that there's a need for that.
There
We were chatting
is
before.
less about consumers, but more about businesses. Like you need cash quickly on a lot of, I don't know, if you're running a SMB, not like a sketchy one, just like if you're selling entertainment tickets, for example, like you need to provide cash towards your vendor, like any kind of third party vendor you have. They need cash in order to fulfill like their obligation on whatever business transaction you have. You don't want to have to go to the bank, get the cash, and then send it their way because they need the cash in person. A lot of these businesses do. You're just gonna hire a service to do so. That's what I think. Like that's an interesting angle of like B2B, where in Venmo, like sure you can do the Venmo, but then they need a lot of the times they need cash at hand for something. This is an alternative route to do so, and also like I don't know, if weed becomes more federally legal, that might be the route of just getting cash. Like it's if in LA, I live in LA, like my fiance doesn't feel comfortable going to ATMs to get cash and walking back with it. Like we're trending towards a culture where it's becoming more and more dangerous and more and more safe. And I think having cash on hand is dangerous, but like I see a lot of people also like, oh, you're going to trust your Uber driver to carry your cash. No, I think there's going to be select few delivery, like that are qualified for the delivery that, I don't know, maybe they're risking me handcuffed to a briefcase and that's how they deliver cash. Like, no, I don't know how they're going to do it, but it's an interesting angle.
Yeah, I have a lot of questions on the execution. Like, like labeled vehicles with a sticker. It's like Robinhood, like cash, like they have to be like incognito or something. But yeah, we could go all day I think the brokerage wars, the banking wars is a trend to watch. And to your point, there's just going to be incredible money thrown at getting a very an audience of people that people really need to get in front of, and those are these like Henrys, these wealthy people inheriting money. Like it's gonna be a dogfight. So something to watch. Let's zoom out a bit and look at the state of things in the markets so far today. The futures are not really changed much, but we did have some fresh tariff news. Not the copper this time. Back to the auto. 25% tariff, I believe, or was it 25%, or just announcing a 25% on all auto imports into the U.S. So obviously for GM, Stellantis, not great. But what short-term, long-term, Shy, like, what do you make of that? I mean, I think when I saw it, I was like, I thought he already announced this, but I guess that was like 2 decisions ago.
Yeah, I think we were all waiting. Like we talked about this earlier in the week. I think we were waiting for like the first like Elon initiative that's going to be released. This was that. This is such a tailwind for Tesla. And yes, Tesla's not going to be like they're going to be affected by this, but their competitor, this might be the nail in the coffin for their competitors, where it's going to be, this might be maybe a black eye for Tesla, but it's going to be a fatal stab wound for the competitors. Where let's start with the structural setup for this. Tesla produces 100% of their U.S. sold vehicles within the U.S. at the Fremont and Giga Texas. most competitors cannot say the same thing at all. GM builds their Equinox EV in Mexico. The Silverado is in Canada. The Blazer's in South Korea. Ford is like builds in Mexico as well. Toyota, Honda, Hyundai, like Mercedes, BMW, like they all build in Mexico and like overseas, heavily on foreign assembly. So this tax is an absolute wedge, like instantly imposing a 25% cost penalty on all these core models that were meant to compete directly with Tesla on pricing. So now an example I call it out was like a $45,000 Ford car is now going to be priced at $56K. That's a massive difference for consumers. It's either do that or you sell at a steep loss. And it sounds like this auto tariff, the wording that he was saying yesterday, it feels like it's a 4-year thing. It's not like a chess move. Like this feels permanent during his presidency. So the beauty of this is it doesn't affect a thing for Tesla. Yes, they have some parts that get shipped from Canada, some parts get shipped from China, like sure parts, but like not the whole car. This is like more than competitive edge. I think this is an engineered market squeeze, to be honest, and I think that Tesla is uniquely structured to exploit it. And I think the phrasing I was saying about this were this is going to be like a business model catalyst. The short-term pain it's going to be short-term pain for the consumers, rising prices. There's going to be a lot more limited options out there, and it masks a long-term realignment of the whole auto industry because I don't think people are going to want to own cars anymore. And I think that's what Tesla's going to exploit, and that's why I think they didn't care about. They were like, that's why Elon was like, I could care less about delivery numbers. I'm all about autonomy. Clearly, he knew this was coming down the line, and this is going to be a multi-year thing. I just think that this is all going to be about mobility rather than actually owning cars. I don't think people are going to want to own cars. They're just going to, oh, what's the cheapest, fastest, most available way to get from point A to point B? That's going to be the Robotaxis. Like once the Robotaxi fleet goes live, it's not going to have to convince you to buy a Tesla. You'll use one anyway. It's not because it's trendy or because Elon said so. It's because it's the most efficient route, and that's the end game. Like one policy, one platform to run it all. And I think this does become somewhat of a toll booth for urban mobility for a name like Tesla, where, I don't know, the average car is like probably $50,000. It's a one-time transaction. Now, through the Robotaxi fleets, you could probably make, 200, 250K over its life cycle through rideshare revenue, advertising. Like if there's no driver, no car ownership, you can advertise those rides. There can be in-car commerce. Like there's just so many levers that can be pulled that if Tesla's the last man standing, it doesn't matter what the consumers think about Elon. And clearly that can get improved on. We just saw what happened with Vlad and Zuck. They're going to just care about their pockets. And in a time when inflation is going to go higher, another angle of this is like unemployment is going to tick back up big time. There's going to be a lot of jobs being lost if these like OEMs are going to start demising their business economics. And I think that's why maybe you're seeing a pretty aggressive market reaction. Yesterday afternoon, it recovered, but this morning, like it's red. I think it's because unemployment will tick back up, and that's going to have a lot of FUD in the headlines.
Yep. And I think the state of the administration, like it's not like any of these are like they're not going to bail out any of these companies if they fail, I would surmise. But I think your point about renting versus owning is so interesting in the era of autonomous driving, because you're right that there is something different. If you're sitting in the back seat, like, do you care what kind of car it is? It's a different experience. Like it's not this like, it's my identity, I like how it drives. It's like you're getting in a moving thing. If it's comfortable and nice, like you don't really care. And I think that actually what you're saying, it benefits, Tesla, because you don't care. You don't care if it's a Tesla. It's like a moving box of aluminum and other stuff with like cushions, and you just get in and you get out. And there was in the press conference yesterday, I saw a journalist directly ask Trump, and they're like, did Elon have any influence on this decision? He's like, no. And they're reiterating that, you know, to your point, it'll impact Tesla some as well, but just to a lesser degree. And along the lines of what you were saying, to a lesser degree now, but also to a way lesser degree in terms of where they're trying to go down the line. So very, very interesting. But like, yeah, flat out like, oh yeah, he hasn't been around. Like definitely that didn't have anything. But it is indicative of a bigger movement, potentially away from ownership, which is crazy.
Yeah. No, I think, I mean, to go off that point, the same BS argument that the UNC athletic director had on not influencing the March Madness panel for getting North Carolina in the tournament. But yeah, I mean, I think to put it bluntly, ownership will fade, usage will increase. That's what's going to happen. So usage scales, ownership will fade. Oh, that was a rhyme I could say with it. Ownership fades, usage scales. No, that doesn't rhyme.
That's like a good tattoo or something. Like a lower back. Maybe not. Someone in the chat is saying, what are you talking about? I've never met a car owner who'd want to get rid of their cars. I get that. I think if you're like a car enthusiast, if you're wealthy, you got a really nice one. But if you're like a normal person and it's like, I got a Camry, I got a like, I feel like it's different. And then if you're not driving it.
Well, let me ask you guys this. I just said 45K to 56K. That's a price per jump. That's now 7 to 8% interest rates on top of that. Like what it's, I think used cars are existing. Fine. You're right. Whoever made that comment, but if you're looking to buy a new car, it economically might not make sense in the near term or medium term. Like it just doesn't. Like, it's one of the most depreciating assets out there. You're spending 11K more on that $45,000 for no reason except for someone decided to, and it's going to depreciate significantly. You're going to have to pay. There's so many gas prices, the car insurance. Like, God forbid something happens in an accident, then you're not permanently 7 years screwed on your insurance. Like, it economically might be so even eventually on just going the cyber taxi routes, owning a car, that why would you take all the risk associated with owning a car? Then you can just like sit in the backseat, comfortable, do whatever you want there. So yeah, I think that is going to be the trend. And to be honest, like it makes autonomy was always going to be the future. Nobody knew when. Like 50 years, it'll be weird. Like my grandkids are. It's gonna be, what do you mean? You had to drive? You had to sit in the driver's seat and be in traffic and just. What'd you do? Like. Were you brain dead listening to music? That's so boring. Like, how is that possible? That's what the future is going to be like.
Oh my God. I mean, what do you know, Shay? Like, if in the Tesla model, do they own all of the AVs, or could you be like a landlord and buy 2 AVs from Tesla and then you earn income on? Like, is it like their other model of like Uber driving where it's like an investment income opportunity for people?
You could. It could be if you're an entrepreneur, you can have your car work for you.
Okay, that's nuts. Because then you could you can monetize the ride, and then you could like sell the ad inventory potentially.
No, listen, Tesla can adopt a franchise licensing route as well, and that's an easy like, whoa, don't buy the car, just like pay a franchising fee, like aka Subway and 7-Elevens, and make your money that elsewhere, and you take all the risk. That's pretty genius, honestly. I just thought of it right now, but like that would be pretty genius for them.
Yeah, I didn't know if because they would. I'm like, do they want to keep all that money for themselves? But they can scale so much quicker if they have people working for them and just renting it out, and they just take their cut off the top.
Yeah.
Oh my gosh, that's crazy. Do you ride Waymo a lot out in LA?
My fiance does all the time to work. I'm remote, so I don't need to as much.
Yeah.
But yeah, Waymo's everywhere here. But again, I know the argument. Waymo's way ahead than Tesla right now. But their box is so much smaller than the sandbox that Tesla's trying to solve, that if it scales, it scales. But yeah, I'm looking at the market. Oh, I did want to make one more comment. CoreWeave. Remember how bearish I was on CoreWeave yesterday?
Yeah.
Their valuation for IPO is getting slashed from 30 billion to 23 billion now, trying to push it out the door this week.
Oh, wow.
Boom. That is no demand. That is scary.
Well, they probably watched this show. No, I'm just kidding. I think I saw Kramer was talking about it last night, and he was kind of like poking at the same things you were. Which I don't know if it's good or bad historically, but I think the points you were making is maybe what others are seeing when they pull back the layers a bit. But based on that, they still got, once they file, you still got to go. You can't like walk it back, right? Like they're going.
Well, also, what needs to be discussed as well is that, let me pull up the story. Nvidia made an acquisition yesterday. They are
Okay.
acquiring Lepton AI. What does Lepton AI do? They're a GPU reseller. Does that sound familiar? I know, like it's slightly different than what CoreWeave does, but is it though? Like, is it? So
Yeah.
I don't. First off, I don't like. I actually do not like that Nvidia buy at all. So like, I don't understand why they're buying it, because Lepton doesn't own the infrastructure. It's not like it's running a hyperscaler. It's not building its own silicon. Like, it's just repackaging capacity from the hyperscalers using NVIDIA's own GPUs. And now NVIDIA wants to bring that layer in-house. It does, like, on paper, sure, it might sound like vertical integration, but in reality, it just feels like channel conflict. Like, the real issue here is the customer concentration, where like the NVIDIA's largest customers are the hyperscalers. So if the hyperscalers are actively working to reduce their dependency on NVIDIA by developing their own uh, developing and renting out their own chips, like the TPUs, etc., like at lower prices, buying a GPU reseller doesn't send the message to the market that we're not just like your supplier anymore. Like, we're coming for your downstream clients. Like, it just feels competitive for no reason to their biggest customers.
Yeah.
Um,
It's also
I don't,
shitty timing to do that right now, right? Like, why would they? Maybe it's just how it worked out. But they got this other thing. I also think I see in a lot of, like, every other headline now is Nvidia back this, Nvidia back that, and we put a lot of weight on that. They back a lot of stuff. Like, they're putting a lot of chips on the table.
totally.
So I think sometimes too, as investors, you're like, oh, Nvidia backed them. It must be. It's like they back a lot of stuff, and sometimes they're like, hedging certain bets. But it's a company like that. They're making a lot of investments. But yeah, CoreWeave. Tough times for them. Let's look at, like, zooming out. Let's see where we're at today. As the opening bell is opened up, we are in the red. Dow Jones down, S&P down, NASDAQ down, Russ UK down. Everything's down thanks to tariffs. Shay, how are you feeling today relative to yesterday?
Oh, I'm defensive now. I'm
Okay.
actually. I think we're gonna get another leg lower. I bought hedges yesterday. Uh, Again, I called out why. Very open about it. Like, if it breaks the 200-day moving average, which was at 480, 490 on QQQ, I'm defensive, and it is so bearish that we broke through it significantly, and in our bounce, we stayed above the 200-day moving average for less than 2 trading days, and we broke it below. That does not get more bearish than that. I get it right now.
Yeah.
We're still currently at a higher low right now in this pullback. So like, the real test is going to be now at 467 to 468. So I think we're going to probably retest that level. If that breaks, things are gonna get ugly. I think that's when capitulation happens. I really do think so. And also, regarding the auto tariffs, it's 25% right now. We're not getting the reciprocation yet
Yeah.
from like the affected countries. Like, once they reciprocate on their retaliation of these tariffs, it might be 50%, 45. Like, nobody knows how significant the retaliation is gonna be. So like, this is, again, this balance. Like, when I was talking about it, like, I'm not bullish on it because nothing really has changed. This was a structural bounce from oversold nature. Now, like, we still have this geopolitical noise, and April 2nd is just around the corner, and we'll see what happens then. But right now, like, everyone, the Fed, the Trump presidency, like, they're all claiming the same thing: detox, detox. Like, listen to them. Like,
Yeah.
but I will say, half glass full. We are in a rate cutting cycle for the Fed, and this is why it's so different than 2022. The reason 2022 bubble was so aggressive is because we're in the opposite end of what the Fed cycle was. What, like, they had to raise rates because they were at 0% for such a long time, and that was an awful combination of valuations, business spending, recession, and now the Fed had to raise rates. Awful combination. Now it's like, Fed are going to be cutting rates, so that's going to be the liquidity will be a tailwind from that. But that's why it feels more 2018 pullback than a 2022. And I don't think we're going to get in a full bear market, but it's going to be choppy. I don't think we're going to hit a new all-time high this year. And I think that we're going to be a low single-digit green at the end of the year, but it's going to be an ugly process to get there.
Yeah. And then the rate cuts, like, what is the consensus opinion on when they'd actually make a move with those? Like in the summer?
Yeah, in the summer. I think they're pricing in 2 right now. Okay. But even then, like, I don't know. Here's another
That's your tagline today. You're like, here's the thing.
Here's the thing.
And here's
my
another
hot
thing.
take.
Yeah.
So Trump's doing all this thing to force the Fed's hand. Clearly, it's not working. The Fed called his bluff, saying, F you, we're going to do our thing. What's going to happen from this auto tariff? I just said it. Millions of jobs are going to be lost. Unemployment's going to tick back up. What data point is that going to give the Fed now on cutting rates? Unemployment's picking back up significantly.
Yeah.
It's like another chess move to force the hand on Powell. So like everything that they do, it's not binary. You have to think 4D. What's next? What's after this? Why are they doing this? Like,
yeah.
So
it is the things that they're doing to economically push the Fed is what they need to balance. But they can't piss voters off too much because there's a whole political, like, so you get the midterms and like, and that is a delicate game to play. But I think that's what they're trying to figure out. How much can we push over here without not uprising, but like people getting very mad to the point where you lose some of your influence the next round. So it's fascinating. Let's move over to the Cashtag Awards, which I know we've been talking about a lot, but if you guys were watching yesterday, we said we were going to give out some free tickets, and we are ready to do that. So we asked you all to give us some ideas. Tell us what you're tracking. We asked you, what do you think the best trade ideas for 2025? We'll flip through a couple of these. I see ASTS Shy. We talked about those.
Let's go.
You're a fan.
Oh yeah, I'm absolutely a fan. I think ASTS is going to become the American tariff space. I think you're seeing everything that you want from a disruptor. Which again, they're not replacing telecom companies. They're going to be an added layer to it, and that's kind of my favorite kind of innovation. Is like not just disrupting the dinosaurs, giving the dinosaurs tools to continue evolving. And you're seeing them like they have the deals with every telecom monster in the space. So, I like ASTS. I really do like them.
And here's one. I can't believe I've never talked about this one with you, Shy. From Kappa 393, Lockheed Martin. They're saying that's their pick for their defense spending. Thoughts on that one?
No, I don't like that at all. And the defense budget will be evolving rapidly. You're seeing it already. The defense budget getting cut 8%. It's not because they're not going to be spending money. It's because they're reallocating from missile jets, the old guard of defense, to the new age of defense, which is Palantir, cybersecurity, Axon. Like that's where you want the new age of defense. Don't be backwards looking.
Yeah. Well, our first winner that we liked their thoughtfulness in their reply, RSC Invests is talking about IBM Jan 15 2027 300 call. He's citing, or she's citing, we don't know, IBM global leader, quantum computing, AI consulting, hybrid cloud, quantum, your favorite thing ever, Shy. Thoughts on IBM, that call?
Yeah, I mean, IBM is your grandpa's favorite quantum play. I always say that. So like, Honeywell does the same thing, but IBM, like, they're having a renaissance. Just look at their stock price. Like, nobody's talking about them really on all these different early sector growth themes, but they have their hand in it. Absolutely. I don't know if they can deliver long term, but there's a place for them in the new digital economy where before I think they're priced not for death, but like just dead money. That's not the case anymore.
Yeah. Well, congratulations to RSC Invest. We will be in touch regarding your free passes, the Cashtag Awards. Let's keep going. Again, just to be clear, I'm reading a bunch of these. If I don't say it's a winner, sorry, you did not win. We like you. We're acknowledging you. But if you're a winner, we'll call it out. This other one here from GC Trader 88, Starbucks short, bearish. Any thoughts on the coffee wars that are ongoing, Shy?
You have to ask yourself what's being priced into the stock already. What's FUD? I will say they experienced a similar fate as Nike, where they lost their brand mo. They opened the door for competitors. I think Dutch Bro is absolutely eating up Starbucks. Anecdotal evidence, fat line constantly at Dutch Bros. They are tackling the Gen Z and young millennials and alpha. Starbucks lost that generation. So now they have to probably innovate to capitalize on the younger generations, and they're probably going to have to go, if I had to put my corporate strategy hat on, go the McDonald's route, partner up with a Travis Scott to create a drink, partner up, or the Aeron route. Every new pop star, Sabrina Carpenter, etc. Like, do a
Dunkin'.
collaboration and create,
Yeah.
collaboration and make a drink and have their brand and name associated with it. That's a cool little new flavor. That's what you have to do. You have to make it more exciting.
Yeah.
But yeah.
I've done some consulting work in the coffee space and worked with former executives at Starbucks. And from what I hear, and this could be changing, but historically their ethos, they're like coffee purists. And they really feel like they started to lose their way when they started to have like these pink drinks and the foam and the this and the that. And that's why they've been a little, like, they're just a little more conservative in their marketing versus Dunkin' is like an out-of-pocket company. They're like, get this coconut, raspberry, Sabrina Carpenter, Ben Affleck crossover sundae, and we're a coffee shop. So like Starbucks is at a weird place because they're trying to go back to their roots. Their roots are great coffee, consistent coffee, and this like third space thing. The third space thing, I don't know if that's like a bygone era or not. Like that was like a time, right? Like I remember there's a Starbucks when I was in college. I'd go there like on the weekend early and I'd get all set up and it was like that was a thing. Starbucks now it's the mobile ordering, and they were pioneers in the mobile ordering. They have a great mobile ordering app. Basically, like their app is amazing. Their app could be a standalone business in terms of what's transacted through it. But like I don't know, do people want to go hang out at Starbucks anymore? Or do they want to just order on the app, walk up there, and within a minute of their ETA, grab their drink and go? I think that's kind of, they're at this weird place of like, you know, the founder Howard Schultz is out now, but they're still trying to be this together. 4-screen branding, the Seattle, we're about the coffee, we're about the coffee. Culturally, I don't know if we're still at a place where that resonates. And I think I'm really curious to see their upcoming earnings because they really like made a big thing with like, we're going to write your name on the cup again. I had like a hot take with that. I'm like, who cares? Like, I don't know. Like, I don't know. I'm sure there's a lot of very smart corporate strategy people are working on it. I think that's what they're dealing with, though. I think they're trying to win, but the game's changed. So that's my thoughts on Starbucks. But I also like don't think their coffee's very good anymore. Not to be just dunking on them. But we don't have Dutch Bros out east, I don't think. So,
oh, damn.
I know. I've heard about it. I love their ticker, Bros. It's great. It's like a great ticker. Let's keep going down the list. Let's see here. We have one from Wall Street Wingman. Wall Street Wingman, if it loads, is talking about Cashtag NN, 3D geolocation company with large OTM call flow and put seller flow with time, and included a nice chart for us to reference here. I did not have this company on my radar. Do you have any thoughts on this one, Shy, or is this a new one for you as well?
New one for me. It's out of my realm. However, I'm looking at it right now. It looks like they have a big partnership with Verizon where they're paying a lot of money for their for low band spectrum in the rural and regional areas. I mean, this is just out of my lane, to be honest. Like,
Yeah.
Let me see their fundamentals real quick.
This is what I like about you, Shy, though, because I think sometimes I watch other shows and people will just be like, they'll just start BSing something. And you're like, you know what? I don't pay attention to this. So, like, I think more people should be able to do that. And also, that's why we did this poll to surface ideas, because, I mean, there's so many pockets of the markets that you could just go down the rabbit hole. And that's what's great about kind of the community vibe is like, this guy goes down the rabbit hole about NextNav. You go down the rabbit hole about ASTS, and we all come together. That's how it works.
Yeah. I mean, first off, appreciate it. I'm very open in saying I have thick skin, so I could care less if I look like an idiot. Sometimes I don't know. But for NN, I mean, it's pre-revenue, so you have to know at the end of the day, sure, they're making $6 million. This is almost like ASTS type of situation. I'm looking at the fundamentals because they're making 6 million this year, but they're going to be making 900 million in 2 years, and that's going to come at 50% EBITDA margin. So it feels like, putting my hat on, like they have probably fat partnerships once they scale, but they're also worth 1.7 billion dollars, and you need to ask yourself, like, make sure, like, ASTS for me, like, I'm bullish on it, but it needs to be a specific percentage in your portfolio because it is a spec. At the end of the day, like, the risk and reward, it's a multi-billion-dollar company with essentially no revenue. Can they scale with their partnerships? Like, that is a big issue for a lot of these like younger companies. But clearly they have the partnerships in place to really explode. And technically speaking, it looks great right now. So
All right.
this is an interesting call out. I'll definitely watch it going forward.
Yeah, and Wall Street Wingman, by the way, you just got yourself a ticket to the Cashtag Awards in New York on April 30th.
Woo-hoo.
Maybe you could be my Wall Street Wingman. You can go to Ulysses. You can help me spit some game. Thank you, everyone. We had so many amazing comments. We'll be giving away more tickets in following shows coming up next couple weeks. So there will be more opportunities to win. But thank you, everyone, for the lovely conversation. Let's flip over. Let's see what's trending. Let's see what the streets are saying over on Stocktwits. Top trending stock right now, AMD is down 4%. And we got this nifty wise trending feature that we can just click and see what's going on. So it looks like AMD downgraded by Jefferies to hold from buy, citing concerns over limited AI traction and increased competition from Intel. So investors are reacting to that news. You just brought up AMD, Shay, maybe 20 minutes ago.
Yeah, I mean, listen, if I was an analyst on the street, I'd be tuning into this call because this is where you can get some interesting angles of certain names. But yeah, I mean, AMD has an Nvidia problem. I've been very open about that. And it's something that's just not going away anytime soon. Like, this is the exact reason why Nvidia is obliterating AMD and AI, which is, they're not saying that, but clearly their lack of AI traction is due to Nvidia's presence. Nvidia is dictating the pace of AI infrastructure. You can't ignore that. And AMD is nowhere close to keeping up. They both trade at very similar multiples. I think it's 20 times forward EBITDA. But you see the profitability for Nvidia skyrocketing while AMD's AI growth is somewhat stalling. So if they're both the same pricing multiple, why would you invest in AMD over Nvidia? The only argument you can make that can be made is you think AMD's growth is violently offsides and it's understated and it's going to reaccelerate. That's valid. I have seen no proof of that yet. And again, you can't just be a hardware company anymore. Nvidia's dominance isn't just about having a better hardware, which they do. They have a better GPU and constantly innovating, especially with the Rubin coming in 2 years. But it's more mainly about owning the whole AI stack from silicon to software, and that's what Nvidia has. CUDA is the GOAT, and AMD just doesn't have any kind of selling point to keep customers in their ecosystem. That's a big issue for them.
Yeah. Continuing with the trending, GameStop. Woof. GameStop's down almost 13% today. They announced a $1.3 billion convertible note. That's going to fund Bitcoin purchases, as they talked about earlier in the week. Investors are unsure of kind of implications of this. There's going to be future dilution. This seems like a pretty big swing in a day. You have any thoughts on? I know GameStop. You have some thoughts on this one, Shay.
Shilling. They are shilling. I mean, listen, it's a dying company. The stock went up yesterday, and what? Because they're just reallocating their assets towards crypto. That doesn't really change anything except for a financial Hail Mary. They're going to take advantage of that bump, and they did. And it's at the expense of shareholders. So, like, I've been so adamant this is not a real company. So, like, I don't have too much sympathy if you're holding the bag on GameStop, but just look what they're doing. Like, you can't be that blind. Like, they're just shilling all the shareholders.
Yeah, and now I'm just noticing also having a rough go of it. SoFi, as you indicated earlier, they're down 7% today. Assuming that has to do with the Robinhood stuff too.
See, Yeah.
The streets are talking. The streets are listening and they're talking. We also have Lulu. Lulu's reporting earnings after market close. That's going to be interesting. Nike reported not so hot results. I think it was last week, 2 weeks ago. Lulu's slightly in the green today as people look ahead to that earnings call. Retail sentiments obviously in the you-know-water a bit lately, but it's a strong brand. You're a Lulu jogger guy, I think. Or did you say you don't wear the joggers?
I used to until my fiance said you can't wear that tight of tapers anymore on your legs. So it's like not the new thing. It's bagginess apparently now. So
I feel
used
like
to
you
love it.
before your fiance was just a mess of a human being.
No, I was just
Based
an
on-
LA douche. I think that's what it was before her.
Like every time you announce like an improvement to your life, you're like, well, like my fiance. I guess that's how you know you found your person. You know, they tell
Totally.
you not to wear the dumbass pants.
I will say she fell in love with me as the LA douche. So I don't like how bad was I? Like I was wearing the Lululemon pants, the Common Project white sneakers, some John Varvatos t-shirt, some like the fade over here with like some kind of weird top, like and earrings.
John
like
Varvatos. I haven't heard that in a bit.
I love JV. He's my favorite. He's like one of my favorite brands.
That's amazing. Well, you can listen to the Lululemon earnings call on Stocktwits later today, and obviously join the conversation, see what's going on there. Let's see what else is going on here. We got let's see, anything interesting that we haven't covered. I mean, Robinhood's down a little bit. That's weird, but it looks like people are questioning kind of the product prioritization. I think people aren't really getting the cash delivery thing. It looks like. So if we click into, it sounds like a bunch of like old school people are like, I don't know about this, which is, I don't know. But it says the dominant community perspective appears bullish, but there's skepticism around the value prop of the new services. So, we'll figure it out. I think Robinhood, I'm just watching them and I'm like, they're executing. I'm not even. I don't own any of their stock either. I'm just like, that's a well-oiled machine right now.
Yeah, I also don't own the stock, which it surprises people because I talk so positively about them. But yeah, I mean, if Robinhood gets to $34, I'm probably going to do a trade around that level. That's what I'm watching. But yeah, the market's red, so I think Robinhood's probably getting somewhat of a profit taking. Maybe it was up 5% after hours yesterday. That might be the case, but it's not a risk on environment, and Robinhood is. All these things are great, but it's still somewhat they have a cyclical risk associated with them because this is their present. We're talking about the future, but presently there's a cyclical risk, and if the market's red, people aren't going to be they can't weaponize volatility as much because people aren't going to be willing to trade and buy the dip. Like people are just losing more money, and their AUM is somewhat correlated with the market going up or not. So yeah, I mean. It's picking back up, actually. I mean, Tesla's up 2%. So, like,
okay.
See, interesting.
Oh,
a lot of the topics
wow.
we covered pre-market.
I know.
Bullish Tesla, bearish SoFi.
Yeah. Talking about pre-market. By the way, if you're in the Stocktwits community, you might have gotten an email from us this morning that just said "Wow," and our editor Tom Burney just addressed it to the nation on X. I love this. This is great. And it's a gif of house. And you know what? We're human. We're a bunch of human beings bringing you the news every day. It's always the ones that you least expect that can hurt you the most. So shout out to Michael Bozello, a fellow iTail. I'm sure your day is going to get better, and we've all been there. So thank you, everyone, for sticking with us when we send emails like this. And I hope it brought a ray of sunlight to your day, which is probably starting a little dark given where the markets are. We're getting close to time, but Shay, any other things you're looking out for today? I know you're back in defensive mode. We do have some macro data coming, I think later today, the next few days that'll come in. But what's sort of like your theme for the next couple days heading into the weekend?
So the market just caught a major bid past 2 minutes. I don't know what caused it. It's about to go green. Yeah, so I don't
probably
know.
That email that just said "Wow."
I think it's listen, Ferrari already just came out. They're raising their prices 10% for their cars. So I think You're going to see more news flow like that over the weekend potentially. You're going to Mexico president said they're just going to give an integral response to tariffs after April 2nd. That just got released right now. So reciprocal tariffs on reciprocal tariffs. That will be the theme the next 4 days. We're below the
also 10% on a Ferrari is not nothing.
Substantial. I know, 100%.
Whoa.
So like, we're below the 200-day moving average, and we're seeing things can get worse. Be cautious. Be patient. There's no urgency to get into the market. I think it was yesterday I was referencing that we have downward slopes on a lot of key moving averages. I would wait until those return back up. And when that happens, that would give me a better green light of like, all right, participate. But back in 2022, if you just waited for that to happen, you would have saved yourself from a year of pain, and you would have missed the first 4 to 5% bounce in the market. But who cares? At that point, the market went up 70% in the next 2 years.
Yeah, and we're seeing now breaking news, some rumors about potentially Nvidia getting in on the CoreWeave IPO, but that needs to be verified. So we're looking into that, but that's something to watch too. To see if
they're trying to be the anchor. Wow, it's that bad. So like,
yeah,
that's really bad. If they had to force a major customer to be an anchor, like they actually are somewhat fearful of a.
Yeah. That's a breaking headline that we will verify for you guys because we don't just follow what. Oh, wait. Okay, there it is. Yeah, it's real. Okay, it was verified by a trusted source. We are media literate over here. So yeah, that's so you say, Shy, that's like it's a little desperado.
It's a Band-Aid.
Okay.
Absolute Band-Aid on a bleeding wound.
Wow. I don't know how else to end the show other than bleeding wound. So on that note, we will be back with you guys next week, all week. Shy's you're taking a couple days off. It makes me sad.
I'll be in Florida. Yeah, I will be on NASA doing some interviews with a company who's about to go IPO in the space economy.
Okay, I guess that's okay. I guess that's fine. We'll have some guest hosts coming next week, including Howard Lindson's going to hop in, and also Ben from the Ben and Emil Show, the crossover event of the century. Is happening Tuesday. And don't forget to obviously watch the Sunday show with Brian and the Daily Rip Live tomorrow. There's lots going on.